All right. Well, hello and welcome everyone to your midweek currency room. This is Sankit here. And as always, here we are wrapping up and taking a look at what's happening so far in this week and then talk about our remaining part of the week. So let's get into it. As always, we're going to take a look at what's happening in the broader markets, do a top-down analysis, take a look at news events, take a look at currency baskets, and then we'll go over some setups here. So let's just get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So as we go to the market analysis here we are, beginning of the month. So now we had a great month of September. We had some really good trades. So now time to wrap up the month and then now look into what's really pressing in the month of October. So we are starting off the month here with this government shutdown. And that's again happening due to that funding package. We see that happen over and over. It's just a normal process. But there have been times where those shutdowns have been longer, and there have been times where those shutdowns have been pretty short. And what is it going to be this time? Who knows? We'll see. But you want to look at the longest one. I think that one will happen back in 2018. That lasted for like 35 days. That was the longest one. We had a very short one last year for like 3 days. It was a partial shutdown. So. We'll see what happens, but that's really where we are. As far as the market goes, we haven't seen this, risk-off sentiment in the markets. Usually, this disruption can be negative for the growth. But again, right now, if you take a look at the markets here, markets are back to all-time highs here. So it doesn't seem like there's a whole lot of concern or concern or fear in the markets. But that's really where we are. Now, the biggest thing that we had, the numbers, we talk about going into this week. Last week, dollar looked great. For the last 2 weeks, dollar looked great. Now, going to this week, we talked about how it was going to be data dependent. So we are going to see some economic numbers come out. And based on that, we'll be able to see where we go. So the employment data that we came out this morning, this is the ADP, which is the private number. And I mean, that was horrible than expected. So minus 32K versus the 52K expected. So again, these are getting back-to-back weaker numbers or negative numbers, I would say, which helped the yields go down. And we saw the dollar go down a little bit on that. So overall, that was not the best scenario for our dollar longs, scenario. Like dollar was doing well, and if we had that good economic data, we could have easily seen dollar go higher, but that didn't happen. So we'll see what happens as we get the rest of the data. We had the ISM number this morning, and that was fine. That was slightly higher than expected. And then all the focus goes on the NFP report, the non-farm payrolls report that comes out Friday. But because of that shutdown, the government, agencies are no longer going to be reporting that number until the shutdown is over. So, the big question is that, are we going to see that report on Friday, or is that going to get pushed? And like I said, I won't be surprised. Right now, it's more likely that it's going to be pushed unless things get resolved before Friday, which, again, we still have a couple more days to figure out. But just keep that in mind that we might not get that data on Friday. But right now, we have the private number. We just don't have the official BLS government number. So really, that's where we are in the markets. Now, when we take a look at the performance here, as you can see that so far this week has been more on the down low. We had some big moves in the last 2 weeks, and things have definitely moved. But I mean, look at what's happening so far this week. I mean, we are seeing the underperformer actually are performing a little bit better. We see some pickup happening in the Kiwi. Aussie continues to do well, but take a look at dollar. And I know when we take a look at dollar and you say, well, the data was pretty weak, so dollar should be the weakest currency across the board. And again, that's not really the case here. Dollar is equally weak as compared to the Swiss franc, and then euro is also weak. So pound is mostly flat. And really the big move came with this little divergence. Now we are seeing that negative divergence happening here between the dollar and the yen, which means that if the dollar goes down, the yen goes up, or the yen goes down, and the dollar goes up, vice versa. So that's really where you have to keep a close eye on. Now, is this something going to change from a trend perspective? I mean, that's where we'll take a look at the chart and see what the trends tells us. But as you can see, overall, things have been below the 0.5% mark, which generally is considered a smaller percentage move. Anything you see above the 0.5% mark is a bigger percentage move. As you can see that so far, we had moves like dollar, we had the Swiss franc, and we had the euro, but these are all the outperformers. So what I'm noticing here is some of the outperformers are underperforming, and some of the underperformers, like the yen and even the Kiwi picked up last night, are outperforming a little bit. So getting that little short-term reversal. Now, when we take a look at broader markets, well, broader market continues to be ripping higher. Here we are. World Stock Index, up 1%. S&P is up like 8.8%. So everything is pretty good here as far as the market movement goes. Cryptos are back up again, thanks to the broader market sentiment. But remember, we talk about how certain things that were underperforming and now outperforming a little bit, and that happens. It doesn't matter. You pick the strongest trend and you pick the weakest trends. This is where, the trend can go one way and the velocity can go the other way. And that's usually where, it's time to kind of take a little step back because, you're getting these opposite moves. Gold is the one that has been continuing to rip higher. Not sure really what's going on with these metals, but I mean, we are seeing a broad-based rally across all metals, and that is continuing so far. And oil markets are down again. Not a whole lot there. So now in the cryptocurrency world, I didn't update that, but let's just go over our market outlook. So the market outlook, here we are. It's still a +3. I mean, I talked about this pullback that happened last week. The big question was that, is this pullback going to get bought out? Or is this going to make a little lower high and a lower low? Or is it going to this is just a pullback and then we break out? And so far, based on this, it looks like the market just wants to break out. If there's some negative news out there, we have the shutdown, and if nothing is really derailing the markets, even the ADP number came out this morning, that didn't really deter the market. Everything is kind of showing that, the market wants to break out higher. So we just starting off the new quarter here, the last quarter for the year, and we are going to see some money coming in the early part, and that's exactly what we're seeing here. So not a whole lot to report from the markets front. Is actually very much the same, throughout the summer. Throughout the September. Here we are going into October. Now, can you say if this is going to be like that till December? Like, who knows? Market changes very fast. And traditionally, if you really look at markets, we get a bit of a increase in volatility. Things start to fall apart, like in September to October. That's usually where we have seen some really big crashes in the markets. And then things recover by October, November, December, it goes one way. But there have been times where, we ran up until October and then gave up a lot of the gains. 2018 was a good example where market just did not run higher. It actually did turn lower, after October. And, this year kind of reminds me of 2018 where we started off with a bit of a scare. Markets were down quite aggressively. And then we saw a big rally throughout the summer until all September. And then if you look back in 2018, market, did a lot different from October till December. So who knows what's going to happen this year. Now, when we take a look at economic data, you can see that we already have RBA out of the way. no change expected. The Aussie did strengthen off that. And right now, just taking a little breather here. But overall, Aussie was in an uptrend going into it, and it stays in an uptrend. We had the jobs opening yesterday, and you can see that was, we have seen consistent draws in this number, and you can see that this number was a little better than expected. So now here we are with the ADP number, and you can see this thing was a little bit more concerning because, we talk about economic data, we talk about, the expectation, the Fed and the interest rates. This is where, this number was, did spike or actually spiked the yields lower, the bonds went up. So we're seeing a little bit of a easing of that and again, off that dollar, not really helping that case there. But you can see that right after that, we had the ISM number that came out better than expected. So, when we take a look at these things, right now, we are seeing economic data kind of holding up. We saw some good GDP numbers last week and some manufacturing numbers last week. So numbers have been pretty good. And this is why I was kind of surprised a little bit with the negative number here. So with that, let's take a look at, where we are with the expectation for rate cuts. So this is the, the Fed tool. And this is where you can see what the expectations are. And right now, after this number today, so you can see that there's a 99% chance that the Fed is going to cut rates by 25 basis points. So you can see that a day before it was sitting at 96 and now we're sitting at 99. So one of the questions I always get asked is that, hey, if the data was so weak, why didn't dollar really crash? Why did dollar kind of held in there? Because when you take a look at the dollar performance here I'm going to take a look at the dollar and let's go to the short-term chart and you'll see like dollar is exactly where it is. This is where the data came out at 8:15. So dollar is back at where it was this, before the report came out. And why did it not really crash on that? And I think this is where, we talk about market expectation. And that's where, the expectation is still going strong for 2 rate cuts. And you can see that we only jumped from 96% to 99%. So, is that a big surprise? Not really, because that's already priced in. So that's why we didn't see a big move off of that. Now, here we are with the December number. You can see that December number, this is where we saw a bigger jump. Expectation went from 77% previously now to 87%. So markets are still expecting 2 rate cuts, which, we've heard from Fed 2 weeks ago. And, the Fed was not as dovish as markets still expected to be. So I still think there's a disconnect there. Now, is these numbers are leading indicators because the job numbers are weakening? Or could we see jobs number bounce back up and these expectation comes down? So this is where you have to think about where the big moves happen. So if there's a good data, these number comes down. And that's really where we see a bigger move. But if you take a look at these numbers that are, increasing the chance for the rate cut, you notice that that's already baked in. Markets are already expecting that, and that's why we're not really seeing a big move right off the bat there. So that's really where we are. And as we take a look at the data on Friday, and then on Friday, tomorrow we have the CPI from Switzerland. I don't know if that's going to be a big market mover. We have the unemployment claims as usual. So the Friday's data, like I said, keep an eye and see right now. It's still on the schedule, but based on the shutdown, that data could get pushed. So based on that, you will have to sort of pivot and evaluate if you are going to be trading on a Friday if there's no data coming out. So let's take a look at where the velocity score is. As you can see, velocity score is spread across the board. It's not really leaning one-sided here. So take a look at what's happening today. Underperformer. Kiwi and yen, they are the best leading currency. Now, and then Euro, Swiss franc, they were the best. They actually are underperforming right now. Even Aussie actually went down to a -1 as well, and dollar is right here stuck between. So this is where, if you really take a look at dollar, traditionally dollar should fall apart on that news, and dollar's not really falling apart because I think dollar has really and already come down quite a bit so far this year. So it's not really pushing it down too much. Maybe it's not helping it to go further higher or make new highs, but the expectations is already there for rate cuts. So I think there's not a whole lot change that's taken place in the dollar here. So I think this is where we need to be a little bit less dovish or less bearish on the dollar, because dollar is not the one that's making new lows. Dollar is the one that's kind of holding in a lot better here. So always keep an eye on the data, but then also realize where's the big move, and what kind of moves you're getting. And if the data is bad and the price action is not, then that's where we have to retreat back a little bit.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So let's go into possible trades, go into TradingView and take a look at what's happening and look at some charts. This is where you can ask me questions. Let me know in the chat box anything you want me to take a look at, and we'll take a look at it as we go. So let's just start. So we already talked about the broader markets, and you can see that the broader market actually has broken out now, or close to breaking out. So here we are. Market looks pretty bullish. Now, how are the yields doing? After this data coming out, you can see that yields have come off the lows after the rate cut. And then you can see that it's still kind of holding in there. Now, how is the dollar doing? We just looked at the dollar here. So, if you take a look at dollar for today, you can see this thing is kind of back to where it started from. Now, let's talk about the trend. On a daily chart, you can see we got excited about, and we had a very nice reversal from the FOMC. And after that, we actually rode all the way to the highs there. That was a great trade. Now, since then, we have seen, a pullback. And until yesterday, it just looked like a nice bull pullback. And it still kind of looks like a bull pullback. Notice that we are still above the 20 and the 50-day moving average. Now, the question is that, does it find support here and rise? Or does it continue to drop here? That's really the big question here is, what the dollar is going to do. So I think what you need to do is take a look at the support and see if this holds that level. If it does, I think risk to reward wise, it makes sense to maybe look for a rebound. If this area gives up, then, okay, the momentum is over. This is the level where it should have held. And if it didn't, then that's where I would not be pursuing that. I did take a position in dollar yen early today, just based off that support or resistance. We'll take a look at that shortly here. But let's just go into the yen here. And you can see that yen was staying pretty weak. You can say that there was really no signal for yen to be this strong, but then you can see yen for the last 3 days. And I think this partly has to do with some of the curve in the dollar, that negative correlation that we are seeing. They're seeing the yen go up. Now, when I go in the longer term chart, you can see the yen is just at the top end of the range from a longer term perspective. And if it does, or it can get above it, I think that's where I can get a little bit excited about the yen. But, overall, you can see what the trend in the yen is, that every time you see a rally, they are just good shorting opportunities. So this thing had made a nice break, but this is the level of resistance that we are looking at. So I don't really love it as a long, because, global markets are still holding it steady. And if the dollar bounces back, I won't be surprised if the yen sort of gives up. And based on that premise, I looked at the dollar yen, and I did take a trade right off the support over here. And then the initial stop is right below that level. So this is, again, based on the risk to reward perspective. This is one of those trades that I took. But just realize that, if it's just a numbers game. If it just gives up, I mean, that's it. You're out of that trade. But sometimes you take a trade based on that risk to reward perspective. But this is a very nice, healthy pullback. Remember last week, we had a massive breakout, that 148 something area, and we got up to 150 and now 147. So yeah, this is a big pullback that's taken place. But you can see this thing lacks trend. Moving averages are sideways. So, we'll see if this area holds. And if it does, and it does bounce back, then we have a very good cost basis on that trade. So let's just take a look at other currencies, because when I was taking a look at some of the other currency baskets, the question is that, we don't want to be super hyper focused on the dollar, because, if there's other things that are moving, then that's worth taking a look at. So one of the big things I've talked about is these big breakout levels, and do some of these currencies actually give up those levels? Remember, euro is the one that we talked about. I didn't like this consolidation right there. As you can see that now we are breaking below that support. So question is that, now is this falling back into the range? Well, that's exactly what I'm kind of looking at this way. I mean, we still have this moving averages, which is going to act as a support. So this could be a little messy range, but you can see clearly that it did break out, unable to hold that gains, and now rolling over. Now, Swiss franc, as you can see, Swiss franc is right at that point there as well. And, after the breakout, it kind of held up for a few days, and now they're rolling over. So could there be an opportunity from further downside? I think those are worth taking a look at from a risk to reward perspective. So, if you are or have been the euro and the Swiss franc bull, I think this is where you take profits. If you are looking on the short side, then you're looking for, any bear rallies or some basis to kind of short into. So I think there could be a decent opportunity in some of the European currencies here. Pound is not the one that I really like here. I think Euro Swiss franc definitely looks better. I mean, take a look at this range and the wicks. This we talk about, trade the currency that, fits that, criteria and fits that goal. And, pound is not something that I really, like it as a price action. Now, Canadian dollar is the one that you can see that had a massive move. And now this is another one that we need to pay close attention to, because take a look at the support level that we are at. So with this little rebound in the dollar, you can see the yen kind of follow suit. And as the dollar has given back, I mean, Canadian dollar is actually underperforming here. So as you can see that we are now at the lowest level that we've seen for the year. I mean, remember where we started off this year? We are sitting at the lowest level. And as I zoom out here, you can see there's, quite a bit of chop around this level. And if it does break that level, then this is the level we're looking at. So that's a bit of a range that, we can kind of fall into. But if you're trying to initiate a new short at these levels, just be mindful, because, when we get to these levels and everybody get excited, and then you get this rebound or bear rally, just realize that's just what's happening is, that support hasn't broken, and then price is kind of holding in there. So the CAD's definitely been one of the weakest currency, and I still like that. But shorter term, I think we are reaching that support level. So we need a little bit more confirmation of a break of that. Now let's go into the Aussie. As you can see, this thing has been one of the strongest currency. And right now, you can see that it's taking a pause right up against that resistance. So now is this, we can say that it's a bit of a failed breakout. So I think the Aussie, even though it's still in an uptrend, it's just giving us a little bit of short-term pullback. Now, can we expect this rally to resume? And I think this is where, this is the 4-hour chart. You got the reversal candle here. We're consolidating here. And this is the resistance here. So whichever side it breaks first, and you can use a 4-hour chart on that, whichever side it breaks first was going to lead that direction. Now, on the other hand, and I talked about this yesterday, is the Aussie Kiwi. And, Aussie Kiwi is at the point of the highest level, we talk about, 2022, but even when we go out, this is a 10-year resistance. So I'm not bold enough trader to say, well, it's going to break that 10-year resistance here. Well, and I think if you look in the past, I'll rather take those chances or, those areas as a caution where prices could retreat. So we can see that this thing has, had a massive rally, and you're getting a nice little, a reversal. Am I surprised to see that? Not really, because this is where prices failed previously. So, we talk about, is the Aussie looks better or the Kiwi look better? In that case, if this breaks out higher, then that really bolstered the case for the Aussie strength. But if this stalls over here and pulls back, I think we need to then look elsewhere, because then, here we are with the Kiwi. Even though this is the weakest currency so far, it's catching a little bit. And why is it catching a little bit? Because we're getting a rotation where Aussie's pulling back and then Kiwi is rising here. So keep a close eye on the Aussie Kiwi. And if it does continue to reverse, then we might need to pivot in the whole Aussie Kiwi divergence there. So that's one thing I'm looking at, but you can clearly see that Kiwi has been the worst one and just catching a short-term little bounce here. We have still the support, which is now the resistance that it can run up to. There's still a little bit of room over there for this to run. So where you are in the grand scheme of things, is it a time to short the Kiwi? Not really. I think this is where trend and velocity kind of going the other way. So that's really where we are. So what setup, kind of looks the best here? So I talked about dollar yen. I'm taking a look at it from a reversal perspective. Now, when I take a look at some of the euro currencies, as you can see there, euro yen pull back quite a bit. But again, the question is that do I want to be long the yen? And for that, we need to really break above the resistance on the yen basket, or we need to really see market breaks down here. So don't really love that here. So you can see in the other areas like dollar Swiss franc, you'll notice that even though this pullback took place, this pullback is pretty shallow here. So I think if the dollar does strengthen, this might be a good chance to take a look at dollar against the yen, dollar against the Swiss franc, even euro against the dollar. As you can see, this thing, even it's still off the lows, making a lower high, lower low, lower high. And then could it possibly make a lower low? It could possibly be, if the dollar does continue to, or dollar does bounce off these levels. So we'll see what happens there. But I think this is a good indication that, these currencies are maybe at a turning point. And, the question is that, are we seeing some turns happening? You can see Euro Kiwi, how stretched it was. And then now it's reversing here. So I think in the shorter term, we could see some of these European currencies underperform here, along with whatever is happening with the dollar. Make sure you're pairing them accordingly. But as you are trading a certain currency for too long in one way, just realize that some of these moves don't last forever. Whenever the changes happen, the pivot has happened, you need to pivot with that as well. So I'm really doubting some of that. If the European currency is going to hold up. I think if we see a bit of pullback, then we can start to look at elsewhere and look at some different pairings there. All right, so let me go over some of the other questions here. CAD yen looks pretty good, so let's go over CAD yen. And so it's the same thing as we went over. It did break support low over here. It was the range here. Yeah, nice break there. But as we just looked at the baskets, CAD is at the bottom end of the basket. And then we have the yen, which is on the upper end of the basket. So do I really love to initiate a CAD yen short here, if it has broken down from 107.50 down to 105.50? I don't really love it from that risk to reward perspective. So I rather, you'll see that in my analysis, I'm taking a look at baskets first before I make the decision on which currency pairs to pick. And, CAD yen, even though, you're looking at CAD yen, that actually looks a nice short, but the question is really, the big moves kind of taking place here. So where do I like to enter? Let's just say that, I really like that premise on the CAD yen short. Where would I like to enter? This is not really where to be. I would rather look for some base or some bear rallies to throw short into. But if I have to take a trade here, I don't love it from a risk to reward perspective. And also realize that, the yen has, if you just take a look at how the yen has, generally moved, most of those rallies get sold. And that's one of the reasons why, I'm a lot wary on some of this strength, because, the question always comes is this a rally that's going to sell, or is this a rally that's going to hold? So if you are liking or want to see a reversal, we could see a bit of a rally here, pull back here, and a third leg higher. Now that is going to give me a better signal that there's that continuation taking place. But right now, it's pretty hard to say that, and we still have a lot to go through. And again, if the dollar reverses, I won't be surprised if the yen weakens off that, because it's just based on that risk to the reward. Here's the dollar yen that I took initiate on that trade, but look at that. That's just based on that support and resistance level. So I personally don't love the cat short over here, even though sometimes it looks directionally good. The question really is the continuity to it. So the big moves already happened. Now, what do I think about continuity? And do I think there's a continuity, or do I think there's going to be a retreat? And I think those are the things you have to factor that in. So that's why a lot of times, you take a look at some trades, sometimes they might be not the best looking trades, but sometimes that's where you have a good risk to reward. But yeah, be careful with these continuations, because that's really the big question here, is what kind of continuations do we expect? Do we expect dollar to continue weakening? So if you look at the lows and the highs, we're kind of in the midpoint here. So if that's the case, then I think that's the only time where I would think that maybe yen can continue to strengthen. But if it's just a pullback, and if the dollar does stabilize, then I think the yen trade is going to fail. So that's my little 2 cents on some of the yen trades here. And remember also the data. So if the US data gets any better, or if there's some aspects of data that's better than expected, then we are going to see a sharp reversal in this whole dollar yen as well. All right, let me know if anybody else, if you're looking at anything else, but I think we are mostly on the same page here. Things look pretty clear. I think we just have to, use the right strategy and understand what your holding period is before you initiate a trade. If you're on the sideline, that's totally okay. Month is a long time to trade, and we're just on the first day of the month. So we have a lot of opportunities ahead. Sometimes we just have to kind of see what kind of opportunities are giving. And if things are not really moving as much, those are the times to scale back. And when things are moving a lot and very aggressively, then that's the time to be aggressive. So you always need to dial up and dial down based on how the markets are moving. So hopefully that helps there. All right, so let's just wrap things up over here. I'm unclear about this whole NFP report. So yeah, keep an eye on the schedule. See if that's going to happen. I'll post it in the Discord as well if I see any more developments on it. But really, that's the next big hurdle, because tomorrow we don't have a lot of data, but then Friday was the one that everyone's watching. So if that NFP report comes in negative, you know exactly how the yields and the dollar will move. And again, if that number comes out, let's just say if we get the report, and if that number is actually worse than what we got with the ADP, then we can see a sharp reversal as well. And some of the things that have been underperforming all week. That's including the dollar. So these ADP numbers and government numbers can differ from each other. So just keep in mind that there's always that room of surprise, and that's really where the big move happened, is when there is a surprise. So just always keep an eye on that one. But other than that, let's wrap things up here. Enjoy your rest of the day, and then we'll be in touch, and then see how things come along. Thanks, everyone. Take care.